Today, Ether falls while Bitcoin holds its ground. OKX expands its presence in the United States, including a new California headquarters. And CleanSpark CEO Zach Bradford explains the reasoning behind the company's plan to start selling its mined Bitcoin. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies falling slightly, with Bitcoin holding pretty steady, trading just below $85,000. Ether sliding 1.8% to under $1,600, and XRP also falling nearly 2%, all as of noon Eastern. Okay, let's talk about the top stories. International crypto exchange OKX is expanding its presence in the U.S. following a settlement with the Department of Justice. The company launched trading in multiple states and a self-custody wallet that supports more than 130 blockchains. It's also setting up a new regional headquarters in San Jose and appointing former Barclays director Roshan Robert as U.S. CEO. The move comes after the firm wrapped a legal battle with the DOJ back in February. OKX pleaded guilty to violating anti-money laundering laws and agreed to pay a penalty of more than $500 million. This expansion also comes amid a looser regulatory environment in the U.S. since President Trump took the reins back in January. Next, Coinbase is warning of bearish trends in crypto markets. Its April monthly outlook for institutional investors found the total market cap for altcoins plunged 41% from its high of $1.6 trillion in December. The figure now stands at around $950 billion. The report also said that despite an uptick in VC funding in the first quarter, funding levels are still down between 50 and 60% from the peak reached in the 2021 and 2022 cycles. That limits new capital coming into the space. And of course, there are broader pressures. The report found that crypto's recovery could struggle thanks to recent market uncertainty spurred by trade policy. That's despite the industry's recent regulatory progress. The report suggests crypto prices may find their floor this quarter. Finally, former SEC Chair Gary Gensler joined CNBC's Squawk Box this morning, where he was asked about recent developments involving crypto cases. Last week, the Senate confirmed President Trump's pro-crypto SEC chair pick, Paul Atkins. He succeeds Gensler, who was widely criticized by the crypto community for his regulation by enforcement approach to the industry. Since Gensler's departure, several crypto companies, including Ripple, Coinbase, and Kraken, saw lawsuits or investigations dropped, resolved, or put on hold by the agency. Gensler was asked about that this morning and didn't answer the question directly, instead reiterating his belief that investors need to tread carefully when dealing with crypto.
This field is almost 99, or maybe one might say 100% sentiment and very little on fundamentals. And while something like Bitcoin may persist for a long time because there's 7 billion people around the globe, a real keen interest in it, there's 10 or 15,000 others of these tokens. And to think through your own risk, your own personal risk, about where are the fundamentals, and if this is just about sentiment, then generally those don't end up well, and most then go down.
All right, turning to Bitcoin mining for our main story. CleanSpark announced the company will start selling some of its mined Bitcoin to support operations. It also increased its credit line with Coinbase. I spoke with CleanSpark CEO Zach Bradford yesterday, shortly after the announcement. He breaks down the strategic expansion and weighs in on recent developments for Bitcoin here in the U.S. CleanSpark just announced an increase in the company's credit facility with Coinbase Prime to $200 million. Now, this is all part of a broader capital management strategy that includes the launch of an institutional-grade Bitcoin treasury desk. Can you take us through this expansion? What prompted this development to come about, and what's the goal?
So this has been something that's been long in the works for us. We have been approaching the market, I think, differently than most of our peers have. So, and this really started when we started discussing it at depth this past December, when we raised $650 million on a convertible bond. But we were the only one that didn't take that and buy Bitcoin. Instead, we invested in our operations. And we did so because we believe it's better to invest in the infrastructure behind Bitcoin, which allows us as miners, of course, to get rewarded. And our cost is right around $34,000. So it puts us in a good position to acquire Bitcoin at a much lower cost. And that's really the direction we're going. But as part of that, we were holding all of that Bitcoin. Now, we had a goal in mind, and we wanted to get to about the levels we are now, which we have just over $1 billion in Bitcoin on the balance sheet. But in order to accumulate everything we mined, it means we had to use the capital from somewhere. So we're using that convertible debt and other facilities to add Bitcoin to our balance sheet. We're now going to use the Bitcoin on our balance sheet as kind of an additional step, and we are going to cover our operating costs. So that means we are going to be sellers of Bitcoin on a portion of our production. Our profit margins are really healthy, so we'll still keep adding to the balance sheet. But this Coinbase line of credit will also give us flexibility to support the growth in addition to supplementing it with our operating cash flows.
I want to shift to the changing landscape for Bitcoin amid a more crypto-friendly administration. Since January, when Trump took office, we have seen the establishment of the Strategic Bitcoin Reserve and digital asset stockpile. The president also appointed a White House AI and crypto czar, just to name a few crypto-related developments. What do you think has changed since Trump took office from a crypto perspective, especially as it relates to the Bitcoin narrative? And is the change in tone impacting your business at all? If so, how?
Yeah, since the administration took office, it's been a net positive for our industry. And a lot of this comes from the regulatory landscape. In the prior years, the Bitcoin industry and the crypto industry as a whole, we had a lot of headwinds that we were facing. We find ourselves with, some tailwinds at this point. In particular, the one that I would like to point to that I think's had the highest impact for the industry as a whole is SAB 121. What that is the repeal of something that essentially discouraged traditional banks from having exposure to Bitcoin or other forms of cryptocurrency. As a result, there's now more traditional institutions becoming interested in holding Bitcoin and interacting with it. That's part of the reason is we've launched our broader digital asset management group internally, which means we'll be involved in, trading derivatives. It means we will be involved in trying to generate or in pursuing other forms of revenue, such as, lending Bitcoin on a short-term basis or other avenues that were to a certain degree inaccessible before because it was very difficult for traditional banks or financial institutions to interact. And for us, that made it so that the risk profile of the counterparties didn't meet our standards. But now we can have much higher quality financial institutions interact with us in these transactions.
Now, we have also seen the Trump family move into crypto. In fact, 2 weeks ago, we learned that the president's sons, Eric and Don Jr., got into the Bitcoin mining space, investing in a new company called American Bitcoin, which is controlled by crypto infrastructure firm Hut 8. In a news release, Hut 8 said American Bitcoin aims to become the world's largest miner while building a strategic Bitcoin reserve. What was your reaction to this development, especially with American Bitcoin's US-centric focus? CleanSpark is also based in the US and operates data centers across the country. So do you view this launch as new competition? Are you fazed at all?
We're not, just like we're not fazed by, any of our other competitors. So CleanSpark, we are America's Bitcoin miner. And, as part of how we pursued that is our development on U.S. soil. And the scale we're operating at will take a long time for anybody to catch up on. We are well on our way to 50 exahash. That's our current mid-year target. That would make us, by and large, in a very large gap for the amount of hash rate or processing power that is, managed by a public company on U.S. soil. So we feel very comfortable in our position. We're also not here to keep up with anybody else. We've always, walked to the beat of our own drum, and we built the company differently in a way that we think was extremely cost advantageous, good use of capital, and we're just going to continue doing what we do best, and that's being one of the most efficient and the miner with the highest operational excellence in the industry.
So you actually met with President Trump in private roundtables to discuss Bitcoin mining. You also discussed how Bitcoin mining can be a significant economic driver with Secretary of Commerce Howard Lutnick. Can you take us through those conversations and what was your goal when speaking with them? What was the main point you were trying to get across? And did you find those conversations to be productive?
Yeah, there's been several meetings. In all those meetings, they have been incredibly productive. In the very earliest days when we met with, at the time was going to be the future president and now our current president in Mar-a-Lago, the goal was to help bring an understanding of the industry. And he did have an understanding of the industry, but we wanted to further the regulatory discussion. And our goal wasn't to be treated special in any way. It was to be treated fairly. We were facing headwinds. We just needed the headwinds to go away to create an opportunity for the industry to thrive and flourish in the United States. And I think that that's happened, with very quick moves in the very early days of the administration. The headwinds we were facing from groups such as the SEC and other regulatory bodies, they've really calmed. And I think also now, if you look at Congress, both sides of the aisle are interested and engaged in finding the right type of regulation to create opportunities for the country to grow and flourish. They're also engaged in the energy discussions about how do we have energy abundance in this country, rather than, all the conversations were vilifying the industry in a way that I don't think was fair. And I think we're now having much better conversations all the way across all parties in DC.
Now, Bradford also explained why CleanSpark decided not to join competitors in shifting to AI following last year's halving event. You'll be able to check out his full interview over at cnbc.com/cryptoworld. Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.